do I go through the same questions as I did yesterday, or do I just pick up where I left? I'm not actually
Well,
sure.
I think it's worth asking because most people here will be people that weren't able to access the room yesterday because, as you know, we filled all the seats. So there was a special link for this webinar sent out to all those that hadn't been able to access yesterday. And I don't know if you actually put this link out on your Telegram group again, or if not,
I
it's
have
just purely
actually.
the people that weren't
I
here
did.
yesterday.
I did.
Okay, so we might have a few people that were yesterday as well, but I will leave it to you, I guess. Maybe ask the audience.
I don't know.
I would imagine the majority weren't here.
I just got a message now to say that the webinar has reached the maximum number of attendees.
It has again. Yes, it has. So looking from the windows, some people were here yesterday.
But I did put all the questions that I answered on video, Simon, and then I posted those videos. So I'm not sure. I tell you what I'll do is I will not dwell into the questions at the same intensity as I did yesterday, but I will run through them sort of like 10 seconds on each, and hang on, I'm just get rid of this. Yeah, people are right. We can see it on YouTube, so there's no point in going over all. But ladies and gentlemen, I just need to announce something on because DAX is tearing away right now. One sec. Moving. Stop. Okay. I'm 200% long the DAX. By the way, are you recording now, Simon?
We are indeed, yes.
Okay. So I'm currently 200% long the DAX. From about 12,424 and 12,225, and then I've just seen this bar here, and that's the kind of bar you want to see when you're long. It's just this DAX is so good at that, it just does this air pocket up. Under normal circumstances, I would add to my position, but I want to focus on this web seminar, so I'm quite happy at putting the stop loss at break even, and then see where we are in a little while. But this is good news. After yesterday, this Telegram group really does need a good winner. Okay, so it's just gone 11 o'clock, 12 o'clock Europe, so I think it's a good time to get started. Would you agree? Okay.
Yeah, please do. I think you should. Yeah, we're all here. Everybody's present.
Okay.
Over to you. Thanks.
Right. Okay. So let's get going. So yesterday Kenneth asked me what's my view on Heiken-Nashi. So I answered that fairly thoroughly, and I posted that on YouTube and also on my website tradertom.com. Then Ravi asked what's my main strategy in scalping, and how do you control your psychology to add to winning positions. And this theme of adding to winning position is a theme that's going on and on in the questions that I received. So I am going to dwell into that in some deeper intensity today. But then I go on and talk about how I scalp, and I show Ravi some resources for that. And then I go into some strategies that I use myself when I scalp. And then the control of the psychology, I answer that as well. And then Andrea asks about children, I go into that. And Marcena asks, what questions do you ask yourself before, during, and after the trading day? then I was asked, why do you primarily trade indices? And I explained the economics behind indices versus, say, trading stocks. And then Michael asked about this first put, which is a scalping terminology expression. And this is where we ended up. So Kenneth asked, question relating to gold and silver. If you check the 5 and 15-minute chart today, so that must have been yesterday, maybe even the day before, that's when the email came in, there's some interesting divergence between silver and gold. Silver was strong, gold was not. Have you ever come across any predictive relationships on silver versus gold, and etc.? And so the answer here is, take a look at gold versus silver. Here, gold is the bar chart in red, and silver is the bar chart in black. Now, you should very quickly be able to see that roughly these two metals have pretty much the same direction. By and large, they seem to be correlated. I'm not saying that there's a near identical correlation, but you do notice that that tops seem to come roughly at the same time, and declines, and especially here it's a very, very correlated, seem to follow each other's. So gold bottoms out here and silver bottoms out here. Interesting. This whole idea of having a lower low on one correlated object and at the same time observing a higher low in a correlated object is a strategy that I have used in trading stock indices. Now, this is not part of the curriculum today, but it is something that I point out to people whenever I can, is that if you're seeing, let's say for the sake of the argument that this wasn't gold and silver, but let's say this is Dow and this is DAX. It's interesting to see that when you do have a correlation between two products, and one of them makes a higher low and the other one makes a lower high, and it's been in a downtrend, that this often is the precursor to a trend change in both. It's quite an interesting, and so here I am observing it in something which is not related to stock indices, and yet the same phenomenon is valid. However, if you then go to a 10-minute chart in gold versus silver, you will see that this correlation may not necessarily hold so true all the time. It's easy to be seduced by the correlation in a daily chart where you can see the correlation, but when you begin to hone in on a shorter time frame, and I think the gentleman that asked this asked it in the context of trading it on a shorter term time frame, why else would he ask me to look at a 15-minute chart? I would probably be careful to trade correlations between two related indices unless you really thoroughly have tested this through every single conceivable condition. It means don't go into something without having done your research. And then remember, the only thing you can control at any given point in time is not whether this is going to go up or down. The only thing you can control is your risk. And I personally wouldn't trade the gold and silver correlation. I would simply just trade gold or silver using plain technical analysis. So the relationships and correlations, they come and go in all markets. You will observe it in, say, dollar yen to the Dow Jones index. That's another correlation that works, and then it doesn't work. For years, I traded DAX versus the FTSE and the DAX versus the Dow on an intraday basis. Now, with some years of experience, I think overall I probably made more money than I lost on it. But with the benefit of hindsight, I would think that it's a flawed idea, and I should have just been trading them outright. But there's something soothing about trading a correlation, because you feel that you perhaps have a what's the expression when you've broken your leg? Is it a crutch? Yeah, no one's answering that, so I imagine I got that right. And also, if you are trading, say, long one product and short another, a crutch. Thank you, Robert. If you are trading a correlation, but you're doing it by, say, I'm long DAX, short FTSE, I think more often than not, people doing that is because they feel that they're somehow hedging their exposure. But if the DAX is on a tear and you're on the wrong side of that, it doesn't matter how many counter positions you have in the FTSE, you're still going to lose. So my advice is to trade whatever you can get an edge in, and then make sure you master the one variable that you can always control, and that's your risk. So I wouldn't say that I found a relationship in gold versus silver that I can rely on. So I'm sorry about that. But that's not to say that there isn't one there. Alan then asked, what's the best price action book you ever read, and what is the most profit you ever made in a month? Now, let me answer the second one first. I've had some really good months, like some astoundingly good months, and I unfortunately got embroiled in a bit of controversy back in 2015, where someone who thought they had permission to post my trades posted my trades on the social network. And before I had an opportunity to manage the situation myself and get the post taken down, I had journalists standing outside of my doorstep wanting an interview and wanting a comment. It was a very unpleasant situation. And I kind of had to embrace it and to say, yeah, it's true. What made this controversial was that this was the crash of 2015, and a lot of people were worried about the stock market. And then you really don't want to be the one that stands out in the public and saying, oh yeah, I made a truckload of money when everyone else lost their asses. So, so if you dig back in the archives, I'm sure you can find out, Alan, what I made in that particular month, because that's the one thing about the internet, that once it's out there, you can just never get rid of it. Jeppe asked, how did your journey progress from trading small positions to trading big positions? Now, I think that's a good question, because he asked, did you just start trading bigger? No, certainly not. I started trading a pound a point up to at most 10 pounds a point. And I remember the first time I did 50 pound a point, it was a bit of a one-off. It had a very tight stop loss, but otherwise I spent the next 3-4 years just trading about 20 pounds a point. But while I was trading, I built up my capital, and I basically built on my confidence. I say experience brings about confidence. And so by 2010, I was trading about 75 pounds a point. And you don't need to make that many points to have a very good living out of this. Today, in the conventional I trade very big positions, but in the scheme of things, in the scheme of the big ocean of big traders, I'm still a very small fish. So, so to answer this question, maybe in a little bit less of a note form, I will say, was it Jeppe? Yeah, Jeppe. How would you progress, Jeppe? And I would say to you, start slowly, build up your confidence, build up your trading capital, but predominantly build up your ability to withstand the psychological pressure of taking bigger positions by slowly and gradually getting used to it. I had actually prepared a different set of slides just for this point. And it showed the gentleman who walked across the two twin towers. It's actually been made into a movie, but the movie shows his whole training progress from the end result, where we see him dancing on a line between two trade centers up in the clouds, and how he started off by just suspending a line at a waist height across a field where he was rehearsing. Now, I think that metaphor is a good way to start. Yeah, but you need to build up your skill level and your experience, and then slowly and gradually you will become more and more acquainted with trading bigger and bigger size. But give yourself some time. Don't expect miracles. For me, it took quite a long time before I was trading the size that I really wanted to. But I never lost sight of where I wanted to end up. Marco says, for swing trading using price action with trend following strategy, is there a good way to add to a winning trade? And I must admit, Marco, that I had some problems answering this question. So yesterday's video on adding should definitely be viewed on this, but the overriding principle is that when you are adding to winning positions, you don't necessarily want to add to your overall risk profile. So when you add, you must be in a position to do it from a place of strength because you build up some paper profit, some open profit. Now, ways that you can consider adding to your position is something as conventional as Fibonacci ratio. So let's say that you are on board a good move and you see a counter trend against your position, but you still think that you are trading on the right side of the trend. You can consider something as simple as adding at a 61% retracement or 78% retracement. Or you can pretend that you have no open position and you simply add as if you were coming to the market with a clean slate. And you're saying, well, if I wasn't already in the market, this is where I would want to be a buyer, or this is where I want to be a to sell short. I often get asked this question, where would I add to my winning position? Is it every 10th point? Is it every 15th point? Is it every and so forth? And the answer is that there is no simple answer to it. You simply have to assess your own individual circumstances and say, well, how much am I in profit already? And am I willing to risk letting this profit go? Because when you add to a position, whether you are pyramid adding where you are adding on an equal footing, or that you're simply just adding are you adding on a skyscraper method where you're adding equal stake size every time, so it's 10 pounds, 10 pounds, 10 pounds, or are you adding a smaller amount? You still have to address the issue that when you add to your position, you are now topsy-turving your risk profile, i.e. you don't have to see that much of a move against you before your profits rapidly disappear. And so you have to make up your mind from a philosophy point of view, are you prepared to do that? And at what rate do you want to add to your position? Now, just want to bring your attention back to the DAX. If we begin to get back down into this trading range here, into the 20s, I have just had the conclusive proof that we are in a summer trading range and this market is just not poised to move anywhere. Is there any point in getting disappointed that the market is continuing? Well, if you get disappointed every single time the market doesn't do what you had hoped it to do, trading can become a pretty disillusional experience. So I urge you to try and build up a more detached attitude to trading and say, well, they didn't want to do that. Right. Well, someone sold short up here, so, good for them. I wish it was me, but I actually believe that this market is poised to move higher. On a daily chart, you can sort of see what the big picture is. We had a gap up. This gap was filled, and then we had a pretty conclusively positive day after about 8 negative days, 1, 2, 3, 4, 5, 6, 7 negative days. And now we're trying to build on top of that. And we just hit a high of 54, and it's probably not a coincidence that we hit a high there, because that was the high, not quite, sorry, but this area here between 40 and 60 is where we were yesterday and the day before. So the market probably has some work to do in order to chew its way through the supply that is lying up here. All right, I know that was just a little bit of an interruption. So I hope I answered your question, Marco, at least in this respect. And then you're saying, is there any way to embrace the pain when trades goes against you, or even prepare yourself for the future upcoming pain? Well, look, I don't want to be too gloomy about this, because you really should try and keep an optimistic and cheerful attitude when you're trading, because that actually helps when you are going through these inevitable periods where you are not doing so well. Like a little bit what I'm going through right now. I'm on day 3 and I haven't had a winning day yet. Well, yesterday and the day before were losing days. Sure, I could close right now and I could make this a 20 point winning day. But I'm not really interested in that. That's not my trading philosophy. So is there a way to embrace that pain? I would say, at the risk of sounding like some new age guru, I believe that people spend too much time on getting good at technical analysis and too little time getting good at emotional analysis. So yeah, I probably do sound a little bit like Tony Robbins now, or Susan Powers, and those kind of people. And that's really not the label that I want to have for myself. I don't want to be a trading guru that dishes out advice for emotional pain management. But there are several options available to you from my arsenal of tools. So one of them is what I call visualization. Now, visualization is a little bit of a, frou-frou expression that, hey, visualize. If you can visualize it, you can achieve it, blah, blah, blah. But if you study the works of Maxwell Maltz in the book called Cybernetics, I think that's the first time that I read some earnest material on the art of visualization. And for me, visualization is useful to the point there where I think about a situation that I like to be better at handling. And I imagine it to the point where I begin to feel that emotional intensity. So let's say that I'll use something that I think for this webinar is a good description. Imagine that you have bought the DAX at 24 and you've added to it at 25 and 26, and right now you're up some 20-30 points, and you're making more money on your open position that you've ever made before in trading. And if you took your profit right now, it would be your best year ever. Maybe that's an exaggeration. Maybe the best month ever. And not only that, you could pay off your mortgage, etc., etc., etc. Now, what you would be doing there when you're imagining it is that you're trying to do what I call pain management, because you're going to feel some pain, and that pain is contradictory to what you're actually feeling, because you're feeling a state of euphoria, but that euphoria is mixed beautifully blended in with a state of fear. So you're euphoric over that you're making money, but actually you're also fearful that money will disappear. So if you're imagining yourself seeing that open profit over and over, and this is not a one-day wonder, this is something that you have to practice on an ongoing basis, you will find that you get much better at handling the emotional turmoil, i.e. the biochemicals that are being sent from your brain that causes the euphoria, but also the fear of loss. To handle those chemicals, those chemical boosts, or as it is, not boosts from the brain, that will make you act in a way that is counterproductive to your overall goal. And the better you get at handling those emotions, the better are you at dismissing them and saying, yeah, I know that it would be very nice to have take my open profit, but who knows? From a chart point of view, there's nothing to say that I should take my profit here. So I'm going to give it a little longer time. I'm going to let the market run. Now, the reason why I have spent time on telling you this is because I know from experience that it has helped myself, but I also know from experience of having studied other traders that are far better than I will ever be. Well, maybe they're not. I don't want to put limitations on myself, but take a look at a gentleman like Richard Dennis, who was the father behind the turtles experiments in the 80s. He argued that actually you're far better off spending time studying yourself than studying crop reports and technical analysis, because the real secret to trading lies in being able to handling the emotions that you will feel at times when things are going well. So if you keep having a mental image of you doing well and you are seeing yourself not taking your profit, you actually are much better equipped and prepared when you finally find yourself in this situation. And it doesn't mean you have to set aside 15 minutes every single day. Yes, I believe in repetition is the mother of all skills, but I also believe that you do this. Schedule it by all means, but do it as a time, because it's not meant to be a burden. It's meant to aid you and assist you. It has to come natural to you. Right. Another visual reference guide that I do is I have built up an enormous catalog of winning and losing trades. That means I've created a PowerPoint presentation with a lot of winning trades and losing trades. And every morning I warm up. So if you're going to go for a run or for a swim or whatever you do for exercise, you probably just do a little bit of stretching and just loosen up the body and warm up a little bit. And my brain is a little bit like the same. I wake up all mushy in the morning, go, I don't want to trade, and I want to go to the beach instead, and why do I want to do this? But I do want to trade because I do like it once I get going. But I also know that most mornings I will do myself a disservice if I just don't spend a little bit of time actually preparing myself for the trading day. And preparation for me, if I had the choice between spending 30 minutes going over the charts and seeing what's up and what's down and what's winning and what's losing and what's moving and what's shaking and what price should I perhaps trade today, or I have 30 minutes to mentally prepare myself for trading by going over my old trades and seeing where did I mess up in the past and where did I do well in the past. I would at any day of the week and twice on Sunday choose the time to warm up by looking at old trades rather than going in and knowing where the support and resistance level is, because I would quickly find out what support and resistance is in the market. But if I'm not warmed up, I may not be equipped to quickly handle having a very good trade in my hand, and I may be tempted to take a quick profit rather than pushing my winners. Okay, so you guys are mighty quiet. I hope that that's just a reflection of you taking it all in. Okay, right. Tobias asks, when do you know when to sell resistance and buy report? Buy support. And what makes you think either will hold or not hold? Context, context, context. If it's moving towards support or resistance slowly and orderly, or is if it's moving there fast and furiously. So let's take the DAX again right here because it's a perfect example. There is a good chance that I wouldn't have contemplated a short position, even if it come up there. The pace that it moved up there, I probably wouldn't have contemplated a short position because I would have thought it moved up there very quickly. Now, the caveat here is that we did exactly the same yesterday at 3 o'clock, and we did exactly the same the day before at 8 o'clock in the morning. So having seen that twice before, maybe I would have taken a short position. But if I'd taken a short position here, you would have heard about it in Telegram group. So it's not like I'm talking out of terms here or operating from a false premise. Because if I thought this was a short position, I probably wouldn't still be long the market, and I would prefer the market actually going up to testing these levels here. But back to Tobias's question, I think that it is probably better you spend time on addressing that your job is not to know whether it is the right thing to buy support or sell short resistance. Your job is to control your risk. And if you think that your risk parameters are under control when you execute said trade, well, then no one is going to criticize you. And another way of looking at that is to say, well, imagine that you are sat on a trading floor, Tobias, and there are hundreds of traders surrounding you, and they'll be doing their thing, you'll be doing your thing, but at the end of the desk of all these hundreds of traders, there's a risk manager. And imagine every single time you take a trade that you have to stand in front of him or her and say, this is why I took the trade. Do you think he was going to complain? I can tell you categorically he wouldn't. He would say, fine, I accept that. Well done. Go back to your desk and trade. See, actually, one of the truths about prop trading desks and trading jobs in general is that it's not so much what you make that makes a big difference to whether you keep a job or not. It is how much you lose when you lose. They will happily accept that you have several or many losing trades, as long as none of those losing trades are the ones that makes a big dent on your account. Sure, they will hope that eventually you're going to catch on to a good winner, and you probably will, because the winners will take care of themselves if you take care of the losers. But it's worth remembering, Tobias, that actually your job is to minimize your losses if you are a professional trader. Stephen asked, when looking for trade entry, do you look for support and resistance level or prevailing trend? So again, we have the support and resistance coming in. And here I say, I don't look for neither. I hone in on what is right here and right now. And otherwise I say, accept that your job is not to know, but to control your risk. So let me show you an example from yesterday afternoon. Now, this wasn't announced in the live trading room because I was strictly speaking at a birthday party. But what you're seeing here is a typical example of support and resistance. This is what happened yesterday afternoon in the Dow. Went down and tested this area here. And when we got down there, there were enough people who thought that this was a significant level, that those people that had been short were probably contemplating taking their profits, and those people who wanted to be long the market were contemplating on buying here. Now, what happened from here onwards, no one could have predicted. No one could have predicted it would have held here either. But I want to show you something, because when you're doing your practice, if you just see this after the end of the day, you may be thinking, all right, well, it held support. I can conclude that we should buy support. But if you actually then begin to nail down on what actually happened, you'll see this bar here is the bar that makes the low. The next bar, and this is all on a 5-minute chart, the next bar is the one that makes a slightly marginal low, but it closes more than halfway up the bar of the previous. Doesn't close above it, which is always a very good sign when it does, but it does close more than halfway up. I think in candlestick terminology, this does have a name. I just don't remember what that name is. Maybe it's a Marabuso or whatever it is. The name doesn't matter. The description of it is what matters. Now, what I find is interesting is what happened next, because what you're seeing is that the market goes above this bar here, this very negative bar here. The market goes above it, but the moment it goes above, there are sellers stepping in. These sellers are still thinking that this market is going to move lower. These are what we call limit sellers. They are selling above a prior top. What then happens is that the next bar that you're seeing here is not able to take out the prior bar's high, nor is it capable of being able to take out the low. Now, if the next bar actually took out this low and closed it, I would have argued that there's more downside to come, even though we have support down here. This area probably needs to be tested. However, if the market, after having printed a bar like this, that actually indicates that there are limit sellers still thinking that the market headed lower, if the market, despite that, is able to gain headway above the high of this bar here, it would suggest to us that the market is stronger and that this low may be a temporary low. The next bar and the next bar is absolutely a beautiful example of how people that are short are beginning to covering their positions, and people who haven't been in the market or who are long are adding to the position or getting into the market. Now, what's interesting here is then that this bar here is an inside bar, and this bar here is an inside bar compared to this one. Both of them, they may not be inside bars in relation to each other, but both of them are inside bars compared to this one. And the moment we go below the low of this bar here, which is a key bar, the market immediately gets bought up and closes right at this high. So if you were confronted with a setup like that, you immediately have to think, well, there's absolutely no tail here. None. No tail at all. We close right at the high. Prevailing price analysis, price action analysis would say there's going to be follow through here. there's going to be more buyers that simply do what we call buy on close. Now, buy on close is a technique that I haven't discussed in great detail, and it will have to be another day. But buy on close is essentially the idea that when we do close very negatively or very positively with no tail, and it's early on in the trend, you simply buy on close. The same would apply to over here. You simply sell on close because the odds are high that you're going to get follow through. Now, that's what price action could do for you. Let me just answer a few questions. Keep going. Okay. Okay. Are you only looking for the setups you have in the morning slideshow then? Are you only looking for the setups you have? How do I answer that? I don't think I understand the question. Are you only looking for the setups you have in your morning slideshow? No, okay. It's not just a morning slideshow. Like it encompasses trades that are taken all times of the day. Although I'm still not sure that I'm answering your question. So if you want to add to it, then please just elaborate, Frederik. I know Frederik pretty well, so I'm sure that he won't take offense. I'll just ask him to say retype the question. Okay, so back to the PowerPoint here. I hope that perhaps clarified also some of the ways that I take positions. Stephen then asks, do you look for correlation of trends either in markets like oil and gold? And yes, I do. I always look for oil versus stock indices or stock indices versus dollar yen. And during times of extreme volatility, a break in the stock indices has a tendency to create a break move in oil as well as safe haven currencies. So if I all of a sudden see a very weak, like take a look at the Dow on the 23rd and the 24th of December as a beautiful example, and then study oil on those days, because you will see that Dow moves first, and then you got this flight to safety into safe haven currencies, but also into oil being pushed down. So yeah, I do follow those, but on a dull summer day like this, do I follow it? No, I don't, because there's just not enough money moving the market around right now. Nikolai asks, what's your mindset about trading, and how do you prepare your mindset for the trading day ahead? Now, Nikolai, I've already answered this, but I suggest that you go to YouTube. Now, Thomas, he asked the same question. I'm struggling to cope with losing days. I tend to start the day with the best of intentions, but I end up revenge trading and trading my account rather than the market. Thomas, there is not a single person in this world that has not experienced that. You can absolutely be guaranteed that we've all gone through this to a greater or smaller extent at any point in our trading career. So what I'm going to recommend you do? Please see my video on trading psychology. The icons on YouTube look like this. There's the trading psychology talk, and then there's the question from John. And there's a couple of hours worth of trading psychology. And I think that would be immensely useful. But I also think that I can elaborate a little bit here, because I believe that this is a question of philosophy. What is your philosophy in trading? Are you okay with watching a market take away a lot of your open profits? Now, in order to be a trader, you who add to your position, you also need to accept that sometimes you're going to add to the position and the market is just going to take away your open profit. So I argue that to trade well, you need to combat many what I call normal human qualities, such as you become fearful when you have a losing position, you become hopeful when you have a losing position, or you become fearful when you have a winning position because you're afraid that the market is going to take away what you have already made. Or when you are in a losing position, you're hoping it's going to turn around. Now, there's nothing wrong with being in a position that is making you money and hoping that that is going to turn around and become even bigger profit. That's perfectly okay. But you shouldn't fear that the market will take it away, because you have no control over that. The only thing we can control in the DAX position that we have right now is where we put our stop loss. The rest we can't control. And it takes some getting used to that. It takes some getting used to that world because it's an upside down world that we are living in. You know, we go to the supermarket or shopping Saturday morning and we look for bargains. We may not think we do, but let's say we're shopping for a new mobile phone. We don't care about what network we're on or whether it's got this or that gadget. We're looking for, well, how much is the monthly plan and how much is that compared to, say, another monthly plan with another network? So much of the decisions that we make are based on parameters that have all to do with price and little to do with quality. And so you have to be ever so careful when you are trading the markets that you don't drag that philosophy into that mindset into the market, because it doesn't make sense to buy something that has fallen. It makes sense to short it because there's weakness, but it doesn't make sense to buy it. So as I said, I warm up every single day in order to make sure that I don't suffer from those human qualities. That, by the way, makes me a perfectly normal human being. Because of course it's humanly normal to be confronted with two different flights to some holiday destination, and one is 900 pounds and the other one is 800 pounds. And yeah, sure, one means that you have to get up an hour earlier, but yeah, as your reasoning, yeah, I was gonna get up anyway, so I'm gonna save myself 100 pounds, and I get up an hour earlier and I catch an earlier flight. Perfectly natural, perfectly normal. But it's not normal to buy the DAX just because it's fallen 30 points because you're now thinking it's cheap. And that's the kind of behavior that I want to make sure that my mind isn't falling into when I start trading in the morning. Now, I'm clearly a very visual learner. I am the kind of person that I like to see it in front of me before I take it on board. Now, I know that there's many kinds of ways of learning. So there's people who learn visually, there's people who need to hear it, and then there's people who need to feel it, touch it. Now, I'm a visual learner, which is lucky for me because I like charts. That's why it works so well for me. I hope that's some use to you as well. Just give me a moment here. I just want to have a sip of water. Okay, Frederik, now I understand your question. No, those are not necessarily the trades that I'm looking for. It's not the setups I want to be reminded of so much, but to some extent, yes. It's more, say I had a really good oil trade and I keep adding and adding and adding to the winner. That's what I remind myself of. Let me just take some more questions. Can the market makers manipulate price bars? No. Tom, do you look at pre-market data to buy or sell on the open? Possibly. I think I answered your question, Frederik. Not muligt. Okay, so Henrik is asking, when is possible? Do you add to your winning positions? And if you do, when do you get out? Well, I think this chart is a very good example of that. We've added to a winning position, and there's a very good chance that I'm going to get stopped out here for nothing. And if I do, I will most likely just say this market is not going anywhere anytime soon. But if I were, Henrik, I do feel that this question could also be answered a lot in Telegram, because you often see me in Telegram doing exactly the thing that I'm preaching here. So I think this question might better be answered in action rather than academically in a web seminar. You often reduce your original stop loss when the trade is going against you. How do you decide? Yes, that's true. I may start off with a 30-point stop loss in the DAX, and if I see the market not really doing what I wanted to do, I have a tendency to cut my stop loss right down. And so either you prove to me now that you're going to work or not. And here's a good question again. Here's a good description of this. Look at it. I say this that I'm long this market, but like there's no interest, no follow through, and I'm stopped out. Let's move on. Harry asks, how do you manage your trading and your marriage relation activities? Advice, please. Right. Look, I'm not a marriage expert because I'm divorced, so who am I to give advice? But I found this t-shirt that you might want to buy. It's called Happy Wife, Happy Life. I start very early in the morning, and the reason why I'm doing that is because I know that if the day all of a sudden is going to throw me a curveball where I perhaps need to be a better boyfriend, etc., at least I will then have put in some serious work hours, and then there is perhaps time to go down to the mall in Dubai and say, hey, let's have some lunch and spend some quality time together. I don't think that's much of a relationship advice. So if I had kids close by, I would prioritize them first and foremost. There you go. Pilots ask, what are your best instruments to trade intraday and swing trading, and why? Good question. Intraday, I would say DAX and Dow, and oil and yen, and events like, say, sterling dollar today. As for the question on the quiet periods, ask me again later, because I'm having a bad few days, and I think I'm getting too aggressive for a market which is in holiday mode. And it's just so lucky that I was able to describe that to you right here, right now. As for swing trading, Pilot, the market has sadly changed characteristics in the last year. Currencies had a tendency to be far more volatile and trend much better. But when I go through the weekly charts in currencies, I don't see nearly the same kind of trends that I saw before. And that is a function of new regulation changes, meaning that hedge funds and prop trading desks at institutional level are no longer actively taking positions at the rate at which they did. Okay, Mikkel here is asking, why is it you don't trade Facebook, Amazon, and Netflix, etc., instead of an index? I don't know where you were, Mikkel, but I've already answered that question. So, happy just to go back. Don't want to leave anyone behind. So only take a second. Why do you primarily trade DAX and Dow? Why do you trade, say, Tesla, Amazon, Facebook? It's economics, Mikkel. It's basically economics. Say SAP moves, the difference between the bid and the ask that you're seeing here means that SAP needs to move 0.23% before I'm break even. But Dow or DAX only has to move 0.0037 of a percentage point before I'm break even. Now that's just plain economics. All right, glad I could pick that up. Where do you place your stop loss break even in a winning trade? I place it when it makes sense, Jan. It's virtually impossible to answer that question. Say for the sake of the argument that you had bought the Dow here and your stop loss was down here. Once the market had made its way up here, you could move your stop loss up here. And let's say it moved up here, you could have moved your stop loss up here. So you move your stop loss up from what makes sense from a technical point of view, rather than from an emotional point of view. I'd like to just delve into Henrik Valquist's question again. When is possible? Do you add to your winning position, but taking profit? Well, you know there's a saying, Henrik, make sure you take your profit slow. Hate to take profit, love to take a loss. So another way of addressing that, Henrik, is say for the sake of the argument that you had 1,000 Danish kroners in profit on adding several times, and now the market is beginning to take quite a big chunk of your profits away. You can decide, well, look, if it takes away half of my maximum open profit, then I'm cutting my trades here. That's one way of doing it. Another way of doing it is to place your stop loss at a point where you say, well, if this was to happen, I don't want to be part of this anymore. I hope I answered your question, Pilot. Things have certainly changed, but they will most likely change again. Martin asked, when placing a stop, can it be for 10 ticks, for example, or is it better to place it at most 2% of your account, no matter what? I have been told that if you need a bigger stop, it's because it was a bad entry. I don't know who told you that. And in fact, I don't know how to answer this question because they don't add up. When placing a stop, can it be 10 ticks, for example, or is it better to place at 2%? Well, 10 ticks could be 2%, but 2% could also be 20 ticks. It depends on your stake size. So you can risk 2% of your account and have a 200-point stop loss, but you'll probably be trading a penny a point. So I generally, Martin, don't know how to answer this question. I'm sorry. What do you think of Elliot wave analysis? I forget about it. It's just some people love it, and some people say it gives them an edge. I don't think it gives me an edge. I'm not bad at Elliot wave analysis, but I'm a trader, and I prefer to trade what I see and not what I think. Stefan asked, once upon a time you were a losing trader, I assume. Yep. I've been a losing trader for the last 2 days too. What was the final major step that you took that turned you from a new loser or a net loser, I don't know, whatever, to a net profitable trader? There was no major step. There was a lot of several steps. One of them is to go over your old trades again and again and again and remind yourself what it is that you keep messing up on. If you keep adding to your losing trades, then that's where you need to set in, because then you clearly have an issue with taking a loss, and you have some psychological hiccups that you need to address before you can become a profitable trader. Because being a profitable trader and being a losing trader is one of the same thing. It's just two ways of thinking. So winning traders just think differently. And with that, you see, one way of describing it, I haven't done this before, so allow me a little bit of leeway as if you were listening to a 5-year-old here. The losing trader has less discipline and is more succumbed to the whims of his mind, while the winning trader, while using exactly the same tools, is more disciplined in his approach to his losing trades. The losing trader emotionally probably gets thrown off kilt more easily or easier than the winning trader, because the winning trader and the losing trader could easily have the same amount of winning trades and losing trades. But it is how you think when you are in that winning trade. And it's very, very difficult to read your way to an answer. It has to be trained like a muscle on an ongoing basis every single day. Stefan, that's the reason why I warm up, because I know that I can't just train my bicep once. I have to trade it every day if I want it to remain strong. You know, I'm not a religious person, don't subscribe to the whole dogma of God and religion, but I have, for whatever reason, I don't know why, I have a disproportionate amount of close friends that are religious. Jehovah's Witnesses, Muslims, Jehovah's Witnesses, did I say that? Christians, and who will frequently refer to the Quran or the Bible, King James Bible. And one pattern of behavior that I notice in them is that they reinforce their faith, I imagine because they enjoy it, through repetition of the scriptures. So they will literally spend time reading. Now, I've never confronted them by saying, well, look, you read the Bible once. How many times do you have to read it? But if I did, I would say that they would answer, well, because I read and learn something new every single time. Now, when I go over my old trades, I will learn something new about myself every single time too. So it is a muscle that we're flexing and stretching and breaking down and building up again. That's why trading is such a personal endeavor. Yes, you can go to seminars. Yes, you can learn from someone, but that someone that you are learning from, except in very, very few cases, I'm one of those that I hope that I am actually able to, help you along as well that journey, not just from a technical point of view, but also from a mental point of view. But most teachers will teach you a tool, and then they'll pay some a casual comment about, yeah, you must let your profits run, but that doesn't really it doesn't help you any more than if someone says to you, well, you must stop drinking because you're clearly ruining your health, or you must stop smoking. Well, yeah, you should stop smoking, but unless you understand the nature of an addiction, you don't have as nearly good a chance of fighting an addiction than you have when you understand how an addiction takes hold of a man's mind. And once you understand that, you are in a much better place to liberate yourself from whatever ills that you have that you want to get rid of. Now, here I speak from experience, having gone through my fair share of substance abuse, not drugs, but cigarettes and alcohol, in a bad place. And once I understood it, and I understood that through the help of some really, really knowledgeable people, it was very easy for me to stop smoking. Very easy. And it was very, very easy for me to stop drinking, even though that I had certainly been a functioning alcoholic. I assure you of that, because I just understood it. I understood this is what I'm going to experience, and I'm prepared for that. Now, when it comes to sugar, now that's a different thing altogether. Kicking sugar, that's a talk for another time. How does your Renko trading system work, Emil asks. Now, Emil, Renko is something that I teach in my 1 day and 2 day. Now, the reason why I teach it on a 1 day and 2 day is because this is a very extensive subject. It's a simple method, but it has its flaws and it has its upsides. So let me show you an example. This is what a Renko chart will look like when I trade it. Now, you'll see, but that's not a Renko chart. That's a candle chart. Yes. So let me show you what a real Renko chart looks like. Just going to bring up my e-signal package. You probably already know this. Mikkel, yes, I am recording this and I will post the full. Of course I will. So here's e-signal. Show you here. Oh, sorry, I made a mistake there. And this is what Renko looks like. Renko is basically a building block. And the building block in this case is defined as 2. Now let's just say for the sake of the argument that we change it to 10 and then see what it looks like. Maybe that was a bit too much. So let's change. No, actually, let's keep it at that. So what it means is that the gold actually has to move $10 before I get a brick, so to speak. Now, imagine that you use this method on a much shorter term basis. The idea of Renko is that it filters out noise. It means that whatever happens in this $10, you don't really get to see that. You just get to see, well, we moved up $10, we moved up $10, we moved up $10. Okay, gold, if you could stop updating. They moved up $10, moved up $10. Now, the idea of using Renko on a short-term time basis, on a 2-minute chart, the idea evolves around the concept of, well, what is the lowest price that I can observe, say down here? And the moment the market has moved X points in the opposite direction, very much like what you're seeing here in Renko, where we defined that box size as 10. Well, if I get the mark, if I get down the move up a certain amount of points, then I see that as a buy signal. So let's say for the sake of the argument that I'm observing a double top, and down here I'm saying, well, at this point the market has moved X points away from the highest close that I can find, i.e. I get a sell signal here. It could also be that I'm getting a base here and say, well, at this point here, the market has moved up X points, I'm now gonna buy here. So Renko by no means, the Renko strategy is by no means flawless, of course not, but it's a great way of scalping the market on a short-term basis. And I spent 18 months doing this intensively with great success. But then slowly and gradually, I kind of got tired of trading at that intensity, and I started actually wanting to trade bigger positions, making bigger point counts. Just looking at some of the questions that are coming in. Right, let's move on. Thomas asks, please tell us more how you properly add to winning trades. I have no problem to add to a trade, but I have a problem to close an added trade. Now, this is very much like what Henrik just described. Quite often, my added trades will be added too late. I'd like to improve on this. Well, good. So the actual question is, when is a right time to add to a winning trade? At least how many full points must your initial trade in profit before you consider adding it? Thomas, do you not see how impossible it is for me to answer this question? I do this every single day in Telegram, and you have the opportunity to observe and learn from that. But you will also notice that it depends very much on whether I'm trading, say, the Dow or the DAX. The Dow is far more volatile than the DAX. So in the DAX, if the market is on a tear, i.e. it's got momentum behind it, I can add to my DAX every 2, 3, 4, 5 points. But I wouldn't do that in the Dow. I would need to see the Dow move 15, 20 points before I start adding to it. So to answer this question here, Thomas, I would say keep studying what I'm doing in Telegram, because that will give you the answer to the question that you seek. Now, you're also asking me about extended bars. Now, extended bars, again, is something that I teach in my courses. An extended bar is a bar that in length is significantly longer than the ones that came before. In fact, why am I drawing it? I can just show you the DAX here. This is an extended bar. That bar there. And under normal circumstances, that should have meant follow through. The fact that we didn't get follow through and we started trading below the low of that extended bar, for me says this market is not going anywhere. We're just sat there. So just to add a little bit more context to the extended bar, I say this is where it would be a good idea if you print out a chart every single day. Let me show you an example. Let's take another. So something like this is an extended bar. You have very little tail. Something like this is not an extended bar because you have a lot of tail. Something like this is an extended bar. This is an extended bar. Why? Because the bars that come before are significantly smaller in size. And when you have a big bar like this, it actually tells you that there's volume behind it. The best trade of the day would have been to observe this pattern here and then look how strongly the market breaks out of this sideways trading range. That is a sell right there. You have to be careful selling short an extended bar after the market has already been going down for a while. The ideal scenario is an extended bar after a counter trend or out of a trading range. Those are the best extended bar signals. Okay, I think we're getting there. Adding to a trade as well, Thomas, is a lot to do with what your trading philosophy is. Are you prepared to let your open profits disappear? And again, I would urge you to see the videos on psychology that I pointed out. I think it was to Jeppe. Tobias asks, how many hours do you use on trading and research each separately? And what do you do when? I.e., what type of research? Okay, so my research comes in all forms, shapes, and sizes. I study a lot about Brooks. I also do a lot of research. So, for example, a lot of the research that I do has to do with what I call scenario research. So let's say, for example, Tobias, let's say, what's the odds of Dow having a negative Monday if Friday was lower than Thursday? The previous Friday was lower than the previous Thursday. That's an example of scenarios, and I do a lot of that kind of research. But basically, Tobias, I start at 5 a.m. and I tend to finish at 9 p.m. But in there, I'll obviously put in breakfast, lunch, and dinner, and exercise. And I don't necessarily want you to replicate my lifestyle. It's quite skewed, I think is the right word. I don't think, and judging from past experience, I should probably pay more close attention to family than I have done. So I'm also making amends there. And Tobias also asks, how do I add to winning positions? I think that I have posted enough about that for you to get tucked into that topic yourself. And if I'm not mistaken, that's it. Okay. So I got a couple of more questions here. From your years of trading and research, what is your favorite statistics? My favorite statistics is if I'm sitting watching the Dow. Let me find the example. Here we go.
Okay.
Yeah, hang on. Just want to show something.
Many thanks, Tom, for all teaching it.
Can you just give me 1 sec? No? Have I lost him?
No, Tom, I'm here. Absolutely. Yeah. Can I help you?
No.
Or?
I just need a couple of more minutes and then I'm done.
Okay, that's great. Super stuff.
Okay. My favorite statistics is, and you're probably gonna laugh at this, but it's good. If you have a red bar, the odds are high that the next bar is also going to be red. If you have a green bar, the odds are high that the next bar is also going to be green. Yeah, sure, there's going to be an example where it doesn't work. Of course there is. But I use this a lot in my trading, where especially when I'm sitting scalping. I think that's my favorite statistics, combined with the statistics that I uncovered on the days of the week. What's the second? Is there any statistic you research surprised you? Yes. When I started doing the statistics on the days of the week, I couldn't believe that there could be statistical relevance to just because Friday was lower than Thursday, that Monday then would have a higher odds of being a negative day than a positive day. That was a real big surprise to me. Right. I think that's it. We've been going for a good hour and 10 minutes. I don't want to kill my voice anymore. Let me just give you an opportunity here to ask any question now. So if you have any questions for me, let me just repeat my email. You scribble that down. hello@trader Oops, there's a mistake there, isn't there? That should be. There we go. So that's my email. hello@tradertom.com. All right, Simon.
Okay, Tom, thank you very much indeed for that.
Thank you.
I
Thank you
think
for
there's
lending your software.
still some that weren't able to get in. Yeah, no, it's fantastic. So I think we'll end it there, and hopefully we can do another one soon as well. It'd be great.
Yes. Be good.
Many thanks again, everybody's great messages of thanks coming in. So, okay, many thanks indeed, Tom, and I'll speak to you later.
Speak to you later. Thank you. Bye-bye. Bye, everyone.